Good morning. Happy Valentine's Day, everybody. Right? Happy Love Day. Let's see if the market will show us some love today and give us some great setups and nice opportunities, some nice bankable trade opportunities. Welcome. Right? If this is your first day. You decided, hey, I didn't get Valentine's Day things that I wanted to get my significant other. Maybe I need to put my money to work for me. Then you're in the right place because this is where we go over all the important news, notes, analysis, information, trade ideas that are key to maintaining a strong relationship between you and your account balance. When it comes to this, thruple that is us, our accounts, and then the stock market. So I'm your host, Adam Holland, stock options expert, expert market strategist, and fellow one percenter, right? Meaning that we are trying to get 1% better each and every day in order to see, a cascading event of positive development happen in our lives, right, across the board. So I'm excited to be here. Happy Valentine's Day. Sending much love to everyone watching and everyone that you love, right? To my people who are singles, sending love to you too, right? To my people that have a Valentine, have a great day. Also realize, what it's about at the end of the day. I feel like just like during the holidays, people can stress a lot, like over Valentine's Day this and Valentine's Day that. When you have people that you love, that's really all that you need on that day. So don't let anything stress you out, because we let a lot of stuff get to us, and a lot of stuff like get in our heads. And at the end of the day, if you're like, hey, I got my wife a Ferrari last year, and this year's stuff happened, right? And maybe you can only get her some chocolates. That's cool. Maybe it's just you. That's all you have. That's also fine. That's what it's about, right? So just make sure that all these days you're not putting undue pressure on yourself, because there's no reason, right? No reason whatsoever. And also make sure to love yourself today, because the relationship with ourselves is most important. If that struggles, every other relationship in your life will struggle. So make sure you show some love to yourself today. You have done a lot between February 14th of 2023 and February 14th of 2024. Reflect on that, acknowledge that, have a journaling session about that, right? Where you look back, you say, oh, what was happening last year around this time, right? And then what am I doing this year around this time? What strides have I made, right? How much better am I feeling? What things was I scared of that I attacked? And show love to yourself for that as well, because we don't show ourselves enough love. So make sure you take some time to do that today. But other than that, y'all, you know what time it is. We dive into what the market has for us. Make sure you throw your ones in the chat, signifying your intention to get 1% better. And let's make this another great day. In terms of top news here, let it rip or let them rip. Big stock swings are in the spotlight as trading exuberance resurfaces with much excitement returning to the markets over the past few months. Tons of excitement. And also, like, not to just be that negative Nancy, but also so many things that just make me want to barf in terms of like the exuberance. Like people just get back and you just see it in Instagram comments, right? Bloomberg Business is like, oh, the market opens for the first red day. And people were like, it'll be back green by the end of the day. Dude, what? Like what makes it's crazy. It's like I don't get what makes people think that we're entitled to just green day after green day after green day. And people really think that that's like technical analysis, right? They think like, yo, the market's been up. That's the only thing it can do. And they're just like, oh, I'm not worried. Like, I'm not worried about my positions. Like, this is the time to buy the dip. Dude, the one red day that we've had out of like these red days, that's the time to buy the dip, my guy. That it's that one single red day. Like, it's just, I don't know how people do it. I don't know how people are out here operating just with such blatant misplaced confidence. But I guess that's just the world that we live in. But it is funny, like going through it. As you get more knowledgeable in this space, you just realize too how much crap you see going on. Like so and so gapped up for earnings. They're like, oh, it's because they did this, which is something that they announced like 3 weeks before, and it's completely, not contingent upon whatever they're pointing out. So it's just funny, right? It's just funny, like seeing you go through it. And of course, on social media, everybody's an expert about this, that, and the third. But especially when markets have been consistently green, everyone is just, oh, this is buying opportunity, bro. It's one red day, man. Like this is not your buying opportunity that you're looking for. In terms of, let's see here, things have been magnified on a broader scale, with the Dow tumbling more than 500 points on Tuesday in response to slightly hotter inflation data, while single stock names have also drawn outsized attention for a whole host of reasons. Robinhood, ticker Hood, was quick to comment on the rebound in trading activity in its latest earnings, referencing a jump in monthly active users and accelerating deposits. FOMO, people, missing out on the market green and want to get in. The ARM Army, some are queuing the old meme days of yesteryear as ARM Holdings, ticker ARM, goes on a roller coaster ride that hasn't stopped yet. A blockbuster rally following earnings saw the stock skyrocket 100% in the past week alone, giving it a nearly 200% total return since its IPO in September. Trade with caution. After shares hit a new record high of $164, ARM tumbled nearly 20% to $120 on Tuesday before restarting its engines overnight to register a 7% pre-market gain at the time of writing. Please, please, please be careful, especially when it comes to options on these stocks. Like ARM, literally a meme stock at this point, moving like a meme stock. People are piling in like a meme stock, but also it's not really moving that much. It seems like a lot because it's just not a very expensive stock, but also it's one of those things where it's not moving enough to compensate for the IV you are spending. You need huge moves, right? And you can't deal with the chop days. So just learn how to trade, well-known blue chip names without crazy high implied volatility, because you can get a big move, but even off like a 7% overnight move, you're not going to make as much profit as you think, right? With a normal contract, you're like, oh, wow, I'm going to be making like 500%. You might make 200% on that. And you just happen to be in at the time that it exactly moved. If you aren't, you're cooked, because just the price of that lottery ticket is so high, it doesn't really make it worth playing. On a fundamental level, the latest catalyst for the British chip designer were a rosy outlook that boosted the entire semiconductor sector, as well as record revenues and bottom line that exceeded expectations. AI was another magical word that helped trigger liftoff, with CEO Renee Haas noting, quote, "It'll drive the need for more compute in a way that we've never seen before, and we're just at the beginning." Note that there has also been significant short interest in ARM, creating the potential for squeezes, especially considering that Japan's SoftBank owns 90% of the company, and there are not as many tradable shares outstanding. Not the only one. Another big mover in extended trading on Tuesday was ride-hailing company Lyft. A typo surrounding earnings margins might typically impact shares, but in the current environment, it briefly sent the stock 60% higher. Yeah, people are just ready to dump money and whatever. Chief Financial Officer Aaron Brewer called out the clerical error on a conference call, adding that the firm had quickly corrected its materials, but a set of strong earnings in the first full year of free cash flow positivity were enough to keep Lyft shares up 16% in the after hours session. Yeah, I don't know. That's kind of funny. I feel like that's a very convenient clerical error. Like, hey guys, we just had this error that sent our stock up 60%, but like maybe don't sell it. Maybe you just keep it. You bought it in error, but maybe you hold it because you like us. It's still up 16%. So I guess congrats to Lyft on that. But yeah, 60% higher. I did see that, and I was like, I'm anxious to see what exactly sent it this high tomorrow. What could Lyft have done? Because Lyft typically is the rejected stepchild when it comes to like Uber and Lyft, because Uber, finally recently turned its first profit and things like that. But Lyft just struggles to keep up, and it's kind of behind Uber in all aspects. And once I saw that, I was like, oh, maybe they finally figured it out. But no, I guess they just figured out that they can't type, right? In terms of economic news here, bumpier road. U.S. stocks fell on Tuesday after the latest consumer price index report took some steam out of a powerful Wall Street rally that has been in place since the end of October. The Dow, ticker DJI, recorded its worst day in nearly a year, and Treasury yields jumped after January's core CPI accelerated by its biggest margin since May 2023. It might be long overdue, with the selling taking away some market froth, but futures are higher again in pre-market action. Quote, "We've been saying for several months that the disinflationary process has paused," investing group leader James Kosteridge declared, adding that the Fed must shelve any rate cut plans for now. Yeah, we'll see about that. We'll see how the cookie ends up crumbling in these next few months. But definitely important to note that CPI came in hotter than expected, right? And we had yields that moved, and now they're pricing in maybe interest rates decreasing more the middle of the year than the first quarter of the year. We'll continue to see, right? We'll see what ends up happening. But the initial forecasts were by the end of 2024. I think we get them well before then. My initial feeling is March. I can check back in on that bank term funding program and see if they have released any type of extension that allow these banks to maybe not start paying back these loans as soon as March. But unless that happens, it's not like they can go that many months outside of March, because especially these regional banks just cannot afford to keep their doors open without the funding of the Federal Reserve. And the Federal Reserve has to start getting paid back that money that they started loaning them last March. So that's where things are at. Something's got to give regardless of the data. Stock news here, cashing in. Amazon founder Jeff Bezos has been cashing in on the e-commerce giant's rally this year, offloading nearly 24 million shares worth more than 4 billion this month. Stock sales come nearly 2 weeks after Amazon disclosed Bezos' trading plan that would let him sell as many as 50 million shares, or about $8.6 billion, before January 31st, 2025. Interestingly, Bezos adopted the trading plan on November 8th, just days after he announced that he was relocating from Seattle to Miami. While he said the move was to be closer to his parents and his spaceflight company Blue Origin's operations, it'll also likely save him hundreds of millions in taxes. Yeah, I mean, why not? Save as much in taxes as you can. That's going to be the goal for everybody. I'm not mad at it, right? At the end of the day, trying to pay as little of it as possible, because I can't control where it's being sent. And frankly, we see it fit to be sending money all over the place, or doing things other than like patching holes in roads and stuff like that. In terms of financials, IRS versus FDIC, the Internal Revenue Service has sued the Federal Deposit Insurance Corp, seeking to determine how much the independent agency should pay to cover around 1.45 billion in taxes owed by failed regional lender Silicon Valley Bank. The FDIC, which took control of SVB in March of 2023, again, just a year ago that whole bank collapse occurred, in the biggest bank failure since the 2008 financial crisis, has denied the tax claim. See more in the dispute here. The FDIC is also locked in a battle with SVB Financial, SVB's former parent firm, amid efforts to recoup its costs in rescuing the failed bank. So the ghosts of banks past coming back here and rearing their ugly heads this morning. In terms of today's markets, we are looking mostly green, which is why, again, didn't rush into anything yesterday. In terms of we get bad CPI data, the market gaps down, and I feel like people are like, oh, it's time to get puts. And yeah, we did go lower over the course of the day in the afternoon, but then we rose right back up to close exactly where we opened a few, hours earlier, which is why it's very important to not overreact and also recognize that there are times to hold them and times to fold them, right? There's times when you need to be out here entering trades, and there's times when you need to sit and you need to wait, right? And you wait for great setups to come to you. Yesterday was one of those times. We'll see if today ends up being one of those times as well, or if it's the time to act. But you being open to that is very important. The biggest realization you can ever make in the trading game is that they're realizing that you do not have to trade, right? And I don't mean that you're scared, so you never place a trade ever. I'm talking about you're trading, right? You're getting into it. You recognize the potential and that it can make you money. And then you start saying, oh, cool, if I just do this every week, I'll be able to, leave my job in 3 months. Or if I just do this every month, I'll be able to, well, every month is not the same, right? Every week is not the same. So that's why you take the opportunities the market gives you, you execute when you have, very, very good looking opportunities, and you go heavier instead of then saying, okay, I'm ready to go. Let's get me one contract of this. And then you have a week where, a week or 2 weeks or 3 weeks of the past few weeks where it's like, boom, 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 everything's hitting. And you're like, okay, I'm going to do one contract, one contract, one contract. You have 3 weeks of that. Everything's going crazy. And then finally after that, you're like, all right, now I'm going to go 3 contracts heavy each time. When this is like the exact time to not do that, right? So it's recognizing that the market does not care about how well you're getting, how acclimated you're getting to trading, right? The market doesn't care that, oh, look, well, my Jasmine started 3 weeks ago. She's been killing it. Now she's more comfortable. She wants to put in more money. I'm going to make sure I keep giving her those big returns. It's like, no, the market does not care at all. We got to make sure we are on the market's time, right? They dictate, like that dictates the pace. We can't just pull trades out of nowhere, and better yet, pull good opportunities that are able to be leveraged by the vast majority of people, right? Are there day trading opportunities throughout the day? Yes. Are there some opportunities that would do more detriment calling out than others? Yes, right? Because if it's not an opportunity that you can profit off of, and people won't chase, or miss out or that type of thing, then it's not even beneficial to mention, right? So knowing when to hold them, knowing when to fold them is very, very important. And making sure again that you just know, because I say it, but people forget the market owes you nothing, right? Don't start scaling up or doing this or doing that without checking in, because there's absolutely no reason to believe that we continue to move how we've moved, right? It doesn't owe us that at all. Um, in terms of today's economic calendar, nothing really important. We got to remember the Fed bar speaking at 4 p.m., but obviously the market's closed by then, so that doesn't really matter. We'll finish up here with our rapid fire stock news rundown. Paramount, ticker Para, to lay off about 800 employees to reduce costs. Make sure your money is working for you, because who knows who's working for who by the end of this month, this year, et cetera, et cetera, et cetera. Right? This is every day. Every day now, major corporations, household names are laying off hundreds of thousands of people. I'm not saying this to fear monger. I'm saying that you want to have control of what you can control so much that when, unfortunate events do come knocking, it does not knock you off kilter, right? That is the only outlook, right? I want you to be able to say, hey, Adam, I've been looking into this and looking into that and learning some new skills. And now I've learned how to do it pretty effectively. And I just got laid off, but I'm also very confident that with what I've learned, I can get, clients here, or even turn my old company into a client off of this new service that I do, right? That's what you want to look to do, is just be prepared, right? You don't want to say, oh man, I knew there were layoffs happening kind of around the sector, but then it came for me and now I don't know what I'm going to do. And now I got to make sure that I make at least, what it costs me monthly during trading, right? That's the stuff that causes you to blow up an account, right? When you then put undue pressure on something that you should not be focusing on as your main source of income, right? Can you eventually leave your job through trading revenue? Yes. Is that something that you want to be focused on at all when you first get started? No, right? Use that job for what it's worth. We've all got, we've got a lot more time, most people on this earth, than we think, right? We act like, oh, 2 years, 3 years, 5 years. You staying on your job for the next 3 years or 5 years, right? Or even seven, and then learning something that eventually matches that income, right? You also still don't need to leave it at that point. But that's not a long time compared to you staying somewhere you don't want to stay for the rest of your life, right? So if it's 3 more years, suck it up, right? If it's that type of thing, but you got to do what you got to do in order to get where you need to go. I say it, I'll continue to say it. Put in an hour a day learning more stuff about AI. AI is not going to replace your job, but somebody who uses AI will replace your job, right? That's how it's going to go. And for a lot of these people, especially in these tech companies, like, it's just you got to make sure that you bring value outside of what your current resume may state. Vizio, ticker VZIO, surges with Walmart, ticker WMT, in talks to buy for over $2 billion. Coca-Cola, ticker KO, sees stronger organic sales growth than PepsiCo. Results from Molson Coors, ticker TAP, top expectations but not guidance. At an inflection point, volatile trade for Airbnb after earnings. Venezuela accuses neighboring Guyana of granting illegal oil contracts. Instacart, ticker CART, shares rise on plan to cut 7% of global workforce. More layoffs. AI-driven lending. Upstart sinks on latest revenue guidance. Boeing, ticker BA, reports 29% decline in plane deliveries during January. Shocker. And then not just companies. The Magnificent Seven are so big, they're effectively countries. That is true. These biggest stocks, right? The biggest stocks here that we have, in the market, they represent so much buying power, right? They literally have the GDP of some large countries, not even just small countries anymore. So these are effectively countries, and they also effectively function like ETFs, right? You've got Apple, you've got Microsoft, you've got Amazon, all these different companies. They're in health, right? They're in pharmaceuticals. They're in, consumer tech. They're in consumer discretionary. They're in consumer staples, right? They're a part of so many different things, and they own so many other companies. That when you own one of these large companies, it's really like you're owning a basket of companies. So yeah, it's just, we're moving into a time where it's just mega companies. It's mega companies, and they're functioning like ETFs, and they literally affect how the world spins on its axis. So the world is changing. Make sure that you're keeping up with that, understanding what's happening. There's no need to be afraid of it, right? As long as you understand it, and you can account for it, then you're good. right? And life goes on, but life is an ongoing series of challenges. There is no life without challenge, right? It's just how you rise to that challenge, how you meet those challenges, and the community that you have along with you on the way in order to make sure that you can hop those boundaries when you come to them, right? And it's not like you won't have off days, right? It's not like you won't have days where you mess up. It's not like you have to be perfect. You can still, have days where you cut up, days where you do something stupid, da da da. But at the end of the day, as long as you're making net positive movement over the course of the weeks, the months, the years, right? You're living a great life. So let's continue to do exactly that. Let's see if the markets has some love to show us today and some opportunities. And if so, we'll make sure to take advantage and make this a great Valentine's Day. Again, happy V Day to everybody here watching, to your significant others, to your loved ones, to your family, right? It's more about, more than just romantic love. It's just love that you share in the relationships that you have. So I definitely appreciate you guys, right? And us being here each and every day. That's huge for me. I hope it's huge for you as well. And let's continue to show love to each other by helping each other achieve our goals, right? So everybody have a great rest of the day. I'll see you back here tomorrow morning for our next pre-market prep session. Have a good one.